Hi and welcome back to another section on financial accounting. So in this series of section, we are going through a Q&A section on financial accounting. And today, as we got on our screen, we have one of the key final account adjustment treatments, which is called depreciation. We are going to discuss and see how we treat them when it comes to financial accounting. Financial preparation, financial statement preparation, sorry. So it is one of the key adjustments that most students always find it difficult to mostly attempt. So in this video, we try to explain, or in this lesson, we try to explain it better by using discussion as a way to guide us to go. So without further ado, let's jump in. Make sure to like and share the video as well. The data below was extracted from the books of Talata Enterprise. So as you can see here, we have the non-current asset, we have the cost, we have date of purchase, and we have date of disposal. All right. Then we have additional information. It says that machine 1 and 2 are depreciated using the reducing balance method, and machine 2 and 4 are depreciated using the straight line method. So reducing balance means that here, for us to find depreciation, our depreciation should be equal to the percentage rate, all right, multiplying the net book value of the asset. So the percentage rate multiplying the net book value of the asset, the non-current asset. So how do you measure net book value? Net book value should be equal to the cost, all right, minus accumulated depreciation. So we'll subtract previous depreciation from the cost of the asset, the original cost of the asset, and then we apply the rate on the remaining cost of the asset, and that will give us the depreciation when using the reducing balance method or diminishing method. But when it comes to straight line, depreciation should always be equal to the original cost of the asset multiplied by the rate, percentage rate, then you are good to go. Or you use a formula-wise, which is cost minus residual or salvage, if any, divided by the estimated useful life, and you are good to go. So let's take note of that as we move along there. So let's read the question. Let's continue our reading so that we'll see what they are trying to tell us generally there. Then he says accounts are prepared to December 31st each year. That is when the company's financial statement actually is prepared. Then machine 1 and 2 were sold. So we have an issue coming up. Machine 1 and 2 were sold for 150,000 and 250,000 respectively. And we have your dates of disposal. You can see it here. So when we get there, we'll see how we do the treatment when it comes to disposal of an asset. All right, so then what is the requirement here? Show the relevant treatment or show the relevant entries in depreciation, provision for depreciation, and disposal account for the relevant years. This expression is this phrase is very, very important for the relevant years. So you look at the information given, then you work out their depreciation, provision for depreciation, and disposal of the account based on the years given. So you don't provide any years or you don't work out any depreciation for any years. You must go by the relevant ones. So let's jump in. First thing first, you need to have the name of the business. So here, we have been told that there's Talata. So we have Talata Enterprise. For short, Talata Enterprise. So first thing, we are asked to find the depreciation for these assets for the relevant years. Notwithstanding, we are saying that machine 1 and 3 are using the reducing balance method, RBM, and then machine 2 and 4 is going by the straight line method. So let's take note of that. Straight line method. Okay, So we start with the depreciation. So depreciation, for calculation purposes, we are going to present what? A statement or a table form for us to go systematically so that we can do the depreciation accurately. So this is how we'll go. We'll present some columns and rows here. So we first have to have what we call the year. Okay. Then the next set we have what? The name of what. So this is what we're going to do first, even before we bring the year. We'll have what we call what? Statement of depreciation. Statement of depreciation. Statement of depreciation for the years. Okay. So we'll start with the year as a head note to that. So we have year. Then we have the machines coming up. So we have what? Machine 1. Then we have next set machine 2. Then we have machine 3. Then we have machine 4 in short. Then we'll have our totals coming up. Okay. So this is how it's going to be generally there. So let's take note of that. So once we have this presented, let's try to form some columns and rows for this. All right, so let's go try to bring this somewhere here. Bring it down a bit. All right, so we'll have that present here. So that's what we're going to do. Since depreciation are provided at the end of the financial period, we're going to have the dates coming up here in the years. All right, so we'll start from 2019. So we'll start from here in that order till we get to the date, the final date where there was a disposal. I think that is where we'll work up to. So take note of that. So we'll have for the first year for depreciation 2019. So we'll have what 2019 coming up here. Okay. Or we better still, let's do this. Let's say that we'll have the first date coming up as what? 31st of 12/19, right? So that we have it in this way, then we flow. So we're going to look out for assets that was in existence as at 31st December 2019, and which has been used throughout what? The year 2019. All right. So we'll start. Go back to the information. So realize that machine 1, the cost was 200,000 and it was bought on 1st January 2019. And we have been told that the company financial year ends on what? December 31. All right. That's 31st what? December. That is when the company financial year ends. So that's what we're going to provide in our depreciation. Before we get into that, you can clearly see that here we have 3 zeros throughout the cost aspect, or even 3 zeros in the figure. So we can present some 3 zeros up here. So that will make our work so simple. Okay. So let's say we'll have 3 zeros up. So that will work with what? The remaining values. All right. So now we start with what? Machine 1, which was bought on what? 1st January 2019. and the cost is what? 200,000. Realize that machine 1 is depreciated at the rate of 20% using what the reducing balance method. But because it was bought on 2019, 1st January 2019, where we don't have any previous accumulated depreciation, because that was the year that was bought. So that means it is fresh in the system. It hasn't been used, so there's no need. We don't have any depreciation for that machine, right? So that means that for us to apply the RBM, for the first time, we're going to apply the rate on the original cost of the asset. And in subsequent period, we will then have to use the net book value principle, where we subtract accumulated depreciation from previous year from the original cost of what the asset. So let's take note of that. So here, straight away, we'll say that since it was bought on 1st January 2019, 1st January 2019, you can see here, that means that throughout the year 2019, you have used it fully. That is, you have used it from what? 1st January to 31st what? December 2019. So that's 12 months, right? So we'll have what we call 12 over 12 multiplying what? 20%, and then multiplying the cost. What was the cost given? The cost was what? 200,000. So here we're going to write here as what? 200. The reason why I'm using 12 over 12 here means that here we are going to apply 1 month ownership, 1 month basis. So depend on the period in which we have used the asset, you provide depreciation for it. So we take note of that. So what do we get here generally? So with my calculation, supposed to be able to get what? 40. Right? Supposed to be able to get 40. And that's what I had generally there. Yeah, supposed to be able to get 40. So let's take note of that. So once you have this, that is fine. Then we move on to what? Machine 2. Machine number what? 2. And we have been told that machine number 2 is depreciated using what? The straight line method. But we ask ourselves, which year was machine number 2 bought? It was bought on what? 30th June. You can see it here. 30th June 2019. So that means that in the year 2019, we have used machine 2 for just what? 6 months. We started using it on 1st July up to 31st December 2019. So we use it for what? 6 months. So if that is the case, that means that here, 1 month ownership, 1 month base will mean that we'll have year as what? 6 over 12. And remember to here, we are using the reducing balance, the straight line method. So we're going to multiply by the cost. And we know that the percentage is what? 10% as the rate. And then multiply by the cost of machine number 2, for which we know is what? 350,000. So it becomes what? 350 on top here. All right, 350 on top here. Then you flow. So what do we get generally here? That will give us a depreciation for machine 2 in the year 2019. Bring my calculator here. Let's see what we can do. So we'll have here as what? 6 over 12 is the same as 0.5. So we'll have 0.5 multiplying 0.1 multiplying what? 350. Supposed to get 17.5. So you're going to get 17.5. Let's say 50. For machine 3 and machine 4, let's see. We are told that machine 3 or machine number 3 was bought on what? 2020. So as of 2019, it wasn't in existence, so no depreciation for that. And then that of machine number 4 to the same thing, 2020. So no depreciation for that. So that means that here we will have dash, okay? We will have dash and then dash for that. And then what will be the total depreciation for the year 2019? We'll add the depreciation value is 40 and then what? 17.5. And that will give us a total value of what? 57. So we'll have 57.5, say 50. Then we are good to go. Then you move on to the next year, which is supposed to be 31st December 2020. So here, what we are doing here is that we are providing for the depreciation of these machines or these assets that we have in there as a non-current asset. Then we move on in that manner once again. So realize that machine 1 is still in existence. It hasn't been sold. As of 2020, we are still using it. So you provide depreciation for it. So the same thing, you will have what? A full year depreciation for it. But note that machine 1 is depreciated using what? The reducing balance method. So that means I will still have 12 over 12 year multiplying what? 20%, and then multiplying what? The net book value. So you're going to have what? 200 minus the period depreciation of what? Which is what? 40 here, as you can see. So we subtract 40 from what? The 200. So that will give us what? 160? I think so. So you subtract the 40 from the 200, and then you multiply the result by 20%, and also multiply by 12 over 12. So what do we get when we multiply this? So calculator-wise, so using my calculator here, we'll have what? Here is the same thing as 1, right? So 1 multiplying what? 0.2 multiplying, we know here to be 200 minus 40. We are going to get what? 32, reducing balance. So take note of that, reducing balance. So you're going to give us what? 32 as a depreciation for machine 1 in the year 2020. So that's the depreciation for what? Machine 1 in the year 2020. Let's go for machine 2 and see what we have. So machine 2 too, as of 2020, was still in existence. So this time around, we are going to charge what? A full year depreciation. Because as of 1st January 2020, we have used the machine from that time to 31st December 2020. So we'll have that coming up here. A full year depreciation will provide that. So we'll have here 12 over 12 multiplying. We know machine 2 is on straight line, so that's what? 10%, all right? Then multiplying the cost of machine 2, for which we know is what? 350. So full year depreciation, if even half year was given us 17.5, then full year depreciation is supposed to give us approximately 35, if I'm not mistaken. Yes, it's supposed to get 35 there. And then machine number 3 on reducing balance method. So as of the year 2020, we bought machine number 3 on 1st January 2020. So that means we have used machine number 3 from 1st June 2020 to what? 31st December 2020. So we'll have it also coming up here. Remember, machine 1 and 3 are on reducing balance. But for the first time, we apply the rate straight on the cost. There's no previous depreciation. So it's a full year depreciation. So we have 12 over 12 multiplying what? 20%. Okay. And multiplying the cost. What was the cost of machine number 3? It's 400. So here, we're going to write here 400. That's 400,000. You have the zeros on top. So what do we get in summary? 20% of 400 is supposed to get what? Is it 80? Yeah, I guess supposed to be 80. You get 80, and we are true. All right, so we're going to get here 0.2 multiplying 400, you get 80, yes. Then, machine number 4 on straight line method, we bought machine number 4 in the year 2020, but it was bought on what? 1st December. You can see 01/12/20. So that means we bought it on 1st December 2020. And we also know that our financial year ends on what? 31st December each year. So that means machine number 4 for the year 2020, we have used it for just what? 1 month. 1 month. So that means I want to have it here as what? 1/12, okay? multiplying what? 10%, all right? And then multiplying what? What was the cost? 540. So you have 540 coming up generally there, 540. So in summary, what do we get? Calculator-wise, we'll have here as what? 1 over 12 multiplying 0.1 as 10%, then multiplying what? 540, you get 4.5. So you're going to get here as what? 4.50. So once we are through with that, then we find the total depreciation for the year 2020, right? So let's see the calculation, how it goes. So we have 32 plus 35 plus 80 plus 4.5. So in sum, we will get what? 151.5. That's 151.5 as the depreciation for the year 2020. Then we move on to 2021. That will be the years that we will have. So we calculate from 2019, 2020 to 2021 because I think that was the latest year that we sold, if we sold some of the machines. And aside that, there wasn't any other information given aside the year 2021. So we don't go any further to do any calculation for depreciation. So we'll have in also here as 31st December 2021. We do the same calculation and we are good to go. But notwithstanding, let's see what we have here in the year 2021. You can clearly see the date of disposal. We have the date of what? Disposal. So that means that some of the machines were disposed of in the year 2021. And you can clearly see that for those machines, we have machine number 1, which was disposed in the year 1st October 2021. And machine number 2 was also disposed of in the year 30th June 2021. So that means that we need to know how much that we use the machine, in terms of the number that we have used the machine in the year 2020, in the year 2021 to their date of what? Disposal. Okay, that's what we need to do. So that means that when we consider machine number 1, we use it for what? Only just 9 months in the year 2021. But we have been told that it was sold on what? 1st October 2021. That means we have used for just what? 9 months. From January to what? 30th December. Because 30th December and 1st October is just 1 day difference. Still the same thing. Because it's the beginning period of for the next month. So that means we have used it for what? Just 9 months for machine number 1. So here, this is what we're going to do. We will say that machine number 1, since we do the calculation on reducing balance method, we will say that here is supposed to be 9 over 12 multiplying what? 20%. Okay. Then multiplying the net book value. So here, what will be the accumulated depreciation for machine number 1? We'll add 40 plus 32 and we subtract from 200. So 40 plus 32 will give me what? 72. So it becomes what? 200, okay, minus 72. So what you get, you multiply by 20%, you also multiply by what? 9 over 12. So we'll have here as what? 9 over 12. You work fast, multiplying 20%, which is the same thing as 0.2. And then multiplying what? 200 minus 72. And what do we get? We'll get 19.2. Because we are using the reducing balance method approach. So you're going to get here as what? 19.2. Thus, we have 19,200 because of the 3 zeros up. So that will be for the machine number 1 in the year 2021. Then machine number 2, we have also been told that it was depreciated, it was sold, sorry, in the year 2021, but it was on 30th June 2021. So it also means that machine number 2 too, we've used it in the year 2021 for just what? 6 months, January to 30th June. All right, so Here too, we'll have what? 6 over 12. We'll have 6 over 12. And then multiplying what? 10%. Okay. This is on straight line method, so you just have to multiply by the cost. So what was the cost for machine number 2? You know it's 350, right? So just multiply by 350. So that is how it goes generally there for machine number 2. So what do we get? Here to do same calculation, we'll have 6 over 12 times 0.5. So 0.5 multiplying 0.1 multiplying 350. So we're going to get 17.5. So here, get there 17.5. Okay. So that will be for machine number 2. Machine number 2. Then move on to machine number 3. Realize that machine number 3 in the year 2021, it was still in use. We haven't disposed of, we haven't sold it off, so we still have to depreciate it for what? 12-month period. So we'll have also it coming up here as what? So we'll have here as 12 over 12. But remember, we said machine number 1 and 2, machine number 1 and 3 are depreciated using the reducing balance method. Don't forget that. So you just have to multiply here by what, 20%. Okay. And then multiplying what? The net book value. So we subtract 80 from 400. Whatever we get, we'll multiply by 20%, multiplying to over 12. So 80 from 400, you're supposed to get what? 320. Okay. Because of my space, I'll write it like that there. So what do we get when you multiply this by 320? So here we will have 1, the same thing as 1 over 12. 0.2, the same thing as 20%. Multiplying 320, you get 64. 64. Reducing balance. Okay. Then, machine number 4 on straight line method. That means in the year 2021, it was still in existence. We haven't sold it off. So, just have to provide depreciation for it. Full year depreciation. So, we have 12 over 12, right? multiplying 10%, multiplying what? 540. So what do we get? So full year depreciation, here is the same thing as 1 multiplying 0.1, 0.1 multiplying what? 540. So you get 54 for that as well as 54,000 there. So that will end our depreciation for the relevant years up to 2021. Then we are through. So we find the totals for depreciation for the year 2021. So we have 19.2 plus 17.5 plus 64. You work fast plus 54. So we're going to get here a summary value of what? 154. 154.7. 154.7. All right, so let's take note of that. So once we are through, we can also find the totals of each machine with respect to their years in the columnar form like that, okay? So let's do that. Here, supposed to get here as 91. Can cross check and let's see. 91 point, is it 91.2? Can check that. So we have 40 plus 32 plus 19.2. 19.2, you get 91 point, yes. Then we do same for the others as well. So we have 17.5. Then we have 35. Then we have the next one is what? 17.5. So we'll get in summary 70. Then the next set, we have 80 plus 64. We get 144. The next set, 4.5 plus 54. You get what? 58.5, right? So you can add on the row side so that you get the totals for, or you can even do the column. So 57.5 plus 151.5 plus 154.7. So you're supposed to get 363.7. Write it all. 0.7, and you are true. So this also goes when it comes to their totals there. Just have to underline double, underline, they are good to go as the totals in the columnar form. Okay. So once you are through, that becomes the depreciation that workings for that. And the next set of things that we are asked to do is what? Calculate what? The provision for depreciation. And then the next set, we look out for the disposal account. So we'll get back to the provision for depreciation soon, but for the purpose of learning and explanation, I want us to chip in the assets account itself. So we're going to prepare the machine account itself as part of these workings, okay? So let's say we have machine account. Before we jump to the depreciation side, that provision for the depreciation. So machine account, let's introduce our T account coming up here. So for the relevant years, it starts from 2019 to that of what? 2021. So we'll have our currencies coming up in 3 zeros. Okay. In 3 zeros. Then we'll have the first year we're gonna take into account the machine in which the machine was bought. So we have 2019 coming up here on both ends. So let's go back to machines to realize that machine number 1 was bought on 1st January 2019. So whether it was bought on cash or check, we don't naturally care about that. So we just want to write in what? Cash book, right? So we'll have in here 01, or let's say 1/1 2019. That's 1st January 2019. So we'll have our cash book here as the narration. All right. And that was what? Machine number what? 1. So record the figure as what? 200, because you have 3 zeros on top. Then, because that is an asset, so when we bought an asset, we debit the asset, we credit what? The cash. So whether cash or check. So since we don't know, we use cash book there for reference guide. Then machine number 22, it was bought on what? 30th June 2019. So for 2019, we bought 2 machines. So we have also 3, 30, 6. Then we have what? Cash book. Okay. Then we have machine number 2. And what was the cost? We realized that was what? 350 as per the question. So you read what? The next set, is there any other machine that we bought in the year 2019? Let's go back to the question. No, that means the next machines or the other machines were bought in the year 2020. So for 2019, we are done. So we just have to balance off our account and flow. So we add the debit and we add the credit. You realize that the debit side on here is the debit side. The total is what? 550, but on the credit is 0. So that means the balance supposed to be at the credit side. So we're going to have the balance here written as what? Balance carried down. Yeah, there's a balance, we're going to send it to what? The next period. That's why we say balance carried it down. All right? So balance carried down. So we'll have the total figure of what? 550. Underline it nicely. 2 double lines, so just 1. That's fine, no problem. So we have here 550. That's going to be the balance we're going to send to the next period. Okay? So that means we'll have here too, supposed to have the date coming up. So we close our account at the end of what? The financial period. So we have 31st December 2019. Okay. So the next set, that means we are moving to what? 2020. So we'll have what? Let me have my 2020 year on top on both sides. Then I'll have first, okay, 1st January. Then I'll have in balance what? Brought down. Then we'll have here as what? 550. Any question you want to throw in a chat? There we go. So 550, we are good to go. Then we ask ourselves, in the year 2020, were there any machines that was bought as well? So yes, we have machine number 3 and machine number 4 was bought in the year 2020. So machine number 3 was on what? 1st January 2020. So we'll have that also coming up here on the debit side. So we'll have cash book, machine number 3, and the cost was what? 400. For that as well, can cross-check that 400. Then machine number 4 too was also bought on 1st December 2020. So we'll have also that coming up at the debit side. Okay. So we have cash book. So we have machine number 4. So the cost was what? 540. Then we flow like that. I think that is all for that in respect to that. So we just have to do our totals, we do the balancing, and we are good to go. Realize that for 2020, there wasn't any disposal in there, so we just end it there, we balance it off. So what do we get in total? You're supposed to get, is it 1,490? Can check that and let's see. So we have 550, 550, we have 400, then we have 540. Yeah, 1,490 on both sides. On both sides as the totals, 1,490. So that means we're going to have our balance coming up as what? 31st December 2020, we have balance carried down as what? 1,490. All right? Then we close for the year 2020. Okay, then move on to 2021 for the next period. So we'll have in here first, that's 1st January, we'll have our balance brought down as what? 1,490 there. But we are not done. We were told in the question that in the year 2021, there was what? A disposal. There was a machine disposal there. So let's work on that as well too. So let's go back to the question. Realize that disposal of the machines were machine number 1 and machine number 2. But machine number 2 was disposed in the month of 30th June 2021. Machine number 2 rather, but machine number 1 was on 1st October 2021. So we go systematically in terms of the date. We start with what? Machine number 2 to record the disposal. So when it comes to disposal, you are going to what? Subtract the original cost of that machine that we are disposing it of from the total asset group in terms of their cost. You're going to subtract the cost of that, the original cost of that disposal machine or that disposal asset from the asset group in terms of their cost. So this is what we're going to do. Since we are subtracting to reduce the total value of the asset group, we will credit what? The machine account, so that we'll subtract its cost from the total asset group cost. So we'll have it here as what? 30th June. Then we'll write in here as what? Disposal. But what machine are we disposing of? Machine number what? 2. With respect to date, we dispose it of. So what was the cost for machine number 2? Realize that the cost was what? 350. So we bring in the original cost, subtract from the asset group. Then that of machine number 1 to realize that was on 1st October, okay, 2021. That is 1st/10, 1/10. So you also write the same thing, disposal, and write in here machine number 1. And what was the cost? Realize it was what? 200. So once we are done, there wasn't any other disposal that was undertaken. So that will be all for 2021. So we do our balancing and we are good to go. So for the debit side, you realize that we have still the total of what? 1,490. But for the credit side, we have the total figure of what? 550. So that means the credit side is lesser than the debit side. So the difference should go to what? The credit side to make the both sides have a value of what? 1,490. So let's take note of that. 1,490. So what will be the difference generally there? So we'll have 1,490 minus 550. You get what? 490. And you are true. So we're going to write that as 31st December as a balance. Balance carried down of what? 940. 940. And we are true. So we'll have in the next year, 2022, balance carried down balance brought down. So we have 1st January, we have our balance brought down, and write a figure of what? 940, and we are done. So that is all for the machine account that is supposed to have generally there. So once we are through, then we move on to what? The provision for depreciation of the machine. So provision for depreciation, provision for depreciation account. So here, all I want to do is to record what the depreciation values that goes into our profit or loss as an expense. Remember, depreciation is a non-cash expense item. It's a non-cash expense item. There's no monetary aspect, but we do so in order to align the cost of the asset to meet the current value, or to meet the current value of the asset. That's why we provide for depreciation, so that we overstate or understate our financial statement with respect to the values that we provide. So here, provision for depreciation account, we want to know how much of the depreciation that goes into our profit or loss account. So for the relevant years, 2019, 2020, then 2021, coming up there, then we flow. So we have 2019. So for 2019, what was the depreciation that we provided? That's why we're going to sign into the profit or loss. The total figure was what? 57.50. So here we take the totals, send it straight in that case. So since depreciation is an expense, when it goes into profit or loss, supposed to be at the debit side, where we are using the T account, supposed to be at the debit side of profit or loss on the left. But provision itself has a credit balance. So we're going to credit provision for depreciation in the name of profit or loss at the credit side. And when we go to profit or loss, since it's an expense, we'll debit in the profit or loss in the name of what? Provision for depreciation as an expense. So we'll have it here. And remember, depreciation are provided at the end of what? The period. So here is going to be profit or loss. We'll have 31st December. So we'll have our profit or loss. Then the total figure we have was 57.50. 57.50 as a total depreciation for the year 2019. I hope we can see that this one. All right. So once we are through, then you have to close our account, have our balance, so that we have that depreciation in accumulation for the machine asset. So we'll have it also coming up as what? 31st, because we are closing the account. So 31st December. So we have in here balance carry down. Okay. So balance carry down as what? 57.50. So we close the account generally there. So I can say that I have the total figure of 57.5. Take this off. So once you have a balance carry down, you need to have a brought down generally there. So we'll have 2020. So we'll have inward 1st January. So we have balance brought down as what? 57.50. Then in the year 2020, what was our total depreciation that we provided? Remember, depreciation provision is a prospective application. It affects the current figures and the future figures you will be dealing with, right? It doesn't affect the past figures. So we call depreciation treatment as what? A prospective application affecting the current figures and then future figures. All right. So here we will have in what was the depreciation for the year. That's why it's always estimated. That's why depreciation is always what? Estimated. So let's take note of that. So for 2020, we have a total depreciation value for 2020 what? 151.5. So we just have to present also that coming up here as 31st December profit or loss. So we have what? 151.50 there. I think that is true. Yes. So what do? We just have to close our account and then we do the total balancing. What do we get? So realize that here the credit side is greater than debit side by the total plus 151.5. We get 209. So we have here as 209, let's say 0.00 as a total. Similar thing coming up here, 209, let's say 0.00 as a total. Then we have 31st December as the balance will carry down. Balance carry down, which is what? 209, okay? Let's say 0.00. So that is that. Then move on to 2021. 2021. Here you work very fast. Okay. So 2021, balance carry down, balance brought down. So we have 1st January. Okay. Then we have balance brought down. BD as what? 209. Okay, 209. Here too, you don't forget, if there is any disposal for any relevant years, you just have to consider that. So disposal too, since when we're disposing the asset, we subtracted the original cost of the asset from the asset group. When it comes to the depreciation too, you're also going to subtract the depreciation of the disposed asset from the total provision for depreciation account, so that we get to know the depreciation, the accumulated depreciation for the current asset that is in use. So let's take note of that. So that one too, since we have the accumulated depreciation at the credit side of provision for depreciation, we will debit it so that we will subtract that disposal value in terms of its depreciation that we have used the asset for, that we have provided for, from the total accumulated depreciation of the machines. So let's take note of that, right? So for 2021, what was the depreciation that we provided for 2021? Here we had a total value of what? 154. That's 154.7. So you just have to bring that also up here. So we have 31st December. So we have profit or loss. Profit or loss. So what is the figure? 154.70. Okay, but we are not done. Come back to the disposal. So we also subtract the accumulated depreciation from the total accumulated depreciations of the machines, so that we know the accumulated depreciation for the remaining assets. So we have machine number 2, date-wise, should begin with what? Machine number 2. So we'll have it here as disposal. So 30th June. So we're going to write here as what? Disposal. So that was machine number 2. So let's go back and check the depreciation that we provided for machine number 2. That's why we computed these totals. Okay, have you seen it? That's what we're going to use it for. So let's take note. So machine number 2, its accumulated depreciation was what? 70. You can see it here, 70. So you just have to bring it here, subtract, so that we take it from the accumulated depreciation at the credit side. So we are subtracting 70. Then that of machine number 1 on 1st October, so we have our disposal coming up as machine number 1. So what was the total depreciation? It was 91.2. So you have it also here, 91.20, right? So once we are through, I think that is all. The next thing you want to do is to do the balancing. You can clearly see that at the credit side, we have 209 plus 154.7. So that is giving us 363. So we have 363.7. But for the debit side, we are having what? 70 plus what? 91.2. We are having 161. So that means the debit side is lesser than the credit side, and the difference should be at the credit, at the debit side as balance what? Carry down. So let's take note of that. So let's find the difference. 363.7. You get 202.5. So we're going to have it here as what? 31st December. You have in your balance carry down as 202.50. So that means we can close our account somewhere here. So we have our closing balance coming up. So the total figure was what? 363.70. Okay. You just have to close it up and then we are through. So 363.70. We close it up and we are through. So once we have balance carry down, then we're supposed to have what? Brought down. So we'll have it also coming up here as 2022 to just record our brought down issue there. So we have it at the credit side. 1st January, balance brought down as what? 202.5. And you are done. This is how we go through also the provision for depreciation. So while we have disposal, you debit the provision for depreciation account. When you go to profit or loss, when you go to disposal, then you have to credit it. So we're going to also work out the disposal account so that you see how it goes. Then the next set, or the last set, is for us to make an account on disposal, right? So machine disposal account. So we will have it also coming up as machine disposal account. So we're going to prepare machine disposal account for the two assets that we have disposed of. Okay. So wherever you see disposal in any of the account, you just have to do their corresponding entries and then you flow, right? So let's take note of that. So here too you have our currencies coming up, 3 zeros on top. All right. So we flow with that. So we go back to the machine account, then we have to record it there. So we have what? For the machine account, we have disposal here, information here. You can see disposal information here. Okay. So you're going to record that also in the disposal account. So what do? We go back. So here it was credited. So that means we're going to debit it in what? The machine disposal in the name of what? Machine, let's say machine 2 account or something like that. Okay. So we'll have it is also coming up here as 30. So here, since disposal occurred in 2021, I'm going to have it as 2021 on top here. So we'll have 30th of June. So that becomes what? Machine number, I think machine number 2, right? Machine number 2. That was the cost. Just have to record the cost corresponding entry. Since here was credited, here you debit it. 350 and you are through. Then machine number 200, also have to bring it up also here. So Machine number 1, 200 also here, and you are true. Then you also come back to the depreciation, provision for depreciation side to as well. What was the depreciation values? We have it at the debit side, so that means we're going to record it as credit in the machine disposal. So bring it also up here. So we have 30th June, that is machine number 2, their disposal, accumulated depreciation in terms of accumulated depreciation. So you have it here 70. Then the next set, machine number 1, is also what? 91.20. So once we record that, then the last thing we want to record is to record what we call their process. That you can see clearly here. Additional information 3, that machine 1 and 2 were sold for 150 and 250,000 respectively. So since we have sold it off, it means that we have debited our cash book and we have credited what? We will credit what we call the disposal account. So we debit cash book and we credit disposal of machine account. Okay? So we want to have it here as machine disposal. So we sold it in the year that was on 30th June for machine 1, for machine 2, sorry. So machine 2, the disposal value was what? I think we were told that was 250. 250 down here. That's for machine 2. And that of machine 1, we'll have it on what? 1st October. That is their process. Okay? So that is their process. So we like say their sale value so that at least you can have an idea. So here it was of what? 150. Just have to present it up. Okay? And since we have sold the item, we shouldn't see it again in our books. So that means machine disposal account, once it's prepared, at the end of the day, we close it. And any difference, we send to our profit or loss account. So let's see how it goes with the balancing, both debit and credit. So we start with the credit side. We have 70. We have 70. We have 91.5. 70 plus 91.2, rather, then 250. Then we have 150. So that means on the credit side, we are having a total figure of what? 561.2. How about the debit side? We have 350 plus what? 200. That means 550 there. So the difference will give us what? 561.2. Then we're going to get a difference of what? 11.2. And since the credit side is greater than the debit side, the difference should be here. And we're going to call the difference in the year. Since we are closing it, it should move with the date, the ending date of what? The year we prepare account. So that should be 31st December. And we're going to call that, since the difference at the debit side of machine disposal, when you go to profit and loss, it becomes what? The credit. So this one is what? Again, on disposal. But if it happens that the difference was at the credit side of the machine disposal account, then it should have gone into the profit and loss as what? A debit item. That would have been what? A loss. So since we have it at the debit side of machine disposal, it's a gain. So gain on disposal. So we can write it as what? Gain on disposal. And the difference was what? 11.20. So you just have to close the account with respect to that. Then everything closed. So we have what? 561.2. Say 0. Close it. Let me try to bring this down a bit. Then we have here to as such 561.20, and we are true. So this is also how the machine disposal account will go. And that will literally bring us to the end of how we do the calculation when it comes to depreciation, starting from how we calculate depreciation and then the machine account for the asset that we bought, the provision for depreciation, and finally, their disposal. So thank you for watching this video. What video was really helpful to you, please do what to like, share, and drop a comment for us to know the areas that we need to cover for you to actually enjoy, to have a nice environment to study and then to pass your examination. So I will see you in the next section where we discuss other issues on accounting. Thank you for joining and have a nice day. Bye-bye.